Hello, ladies and gentlemen. Welcome back to Altcoin Buzz Trading. Today we're talking about Bitcoin and topping and bottoming action. Still not doing any trades as the market is trying to figure itself out. It looks like we're trying to rise into a low volume weekend, maybe rally. Those don't have the best history of playing out. So we're going to pretty much abstain from trades for the moment until things are looking a little bit better. And so we've been in the midst of a downtrend the past several days, moving up a little bit today. You can see we have some resistance here at the 26,938 level. And from here, we'll see if we're able to rally up. If we do rally up, this is prime for what's called a snapback. A snapback is where you bounce back up into recent resistance. And I have a couple of lines for you. I'll zoom in on the daily and we'll look at it on the 2 hour. So this rising trend line here, this is our trend overall on the daily from the recent low. Okay, so that is always a point of contention as we try to rally back. We have a horizontal, which is our 27,289 here. And then we have a declining trend line from a recent high coming all the way down, this is why we have the 2 hour up here. So that's also a point we could snap back. So somewhere in this area, we're more likely to stall if we do rally up. The reason being is that, as we mentioned when we talked about trend lines, these tend to be the angle of the descent or the trend or the ascent, depending on the situation. So if we go up here and we chop up here and fall over, that's pretty much what these trend lines do most of the time. Okay, barring that, we're underneath of this larger trend line, which implies that we're in a more bearish environment. So we don't really have enough information for us to assume that we're going to start rallying from, one minor green on a candle. So we can't get very bullish yet. All right. So, let's talk about that topping and bottoming action. Let's talk about how we can get a little bit bullish. Okay. Now, topping and bottoming is very interesting. A lot of people try to time tops and bottoms. And you know what? Let's just take a look at this time frame. Due to the fact that it's pretty choppy and you have several tops and several bottoms. It's also going to go ahead and show how difficult it actually is to do this and do it effectively. Okay, so we start off with a low down here and we go into some sideways action. Okay, so our bottom here is firmly in place after we form a higher low here, stay above that level, and I could have chosen this level. I mean, this isn't scientific or anything like that. It is scientific, but the point is more art. Charting is like science with art. While there's some statistical things that tend to work relatively well, the art is knowing where to place all these lines and charts and Fibonacci's and things like that. So, but once you establish a low coming off of something that's already existing, okay, first of all, what you could do is look at the existing and say, okay, does every bottom look like this? Yes and no is the answer to most things in trading, as a matter of fact. But here you've got two large candles. Looks like we're breaking away, doesn't it? Because you have this low over here. We're slicing right through it. Volume is really big, but then we just stop. So what's up with that? Why do we just stop right here? Is this telltale signs of a bottom? No, it's not. This is not a telltale sign of a bottom at all. As a matter of fact, this is akin to having the world's best braking car getting up to 120 miles an hour, slamming on your brakes and not hitting that 5-year-old walking across the street. That's really what this is like. This candle closes really low. It's a very high volume candle. It's a tall enough candle. The height of it is called the breadth. And the breadth of the candle is such that it actually respects the breadth of the volume bar. So this has every signature that is going to continue. But it doesn't. It gets stopped dead in its tracks, reverses up, and then we chop around. It's called backing and filling. We go back in the opposite direction, kind of fill in the chart a little bit, find another higher volume candle here. And so we're starting to look at bottoming action. And the bottoming is just the fact that this stopped, okay? And then we were just unable to go underneath of it. So we rally back up a little bit. Now, we go from 120 miles an hour just stopping, being very stable and catching our breath. And that's really what is happening here. So now we do try to undercut that low. And this is where you can start to see a little bit of bottoming action. So after we understand this history of, okay, we try to go lower. We really couldn't go much lower because, like I said, this should have been a freight train. This should have dove all the way straight down, but it stopped on a dime. So now you have to respect that level. And it gets respected here. We're going to zoom in here. It gets respected. It goes under it just a little bit. And going under a little bit is fine. I've got no issue with that, okay? So there it is. I've got zero issue with it going lower and coming back. The fact is it closed above. Closes are important because they'll fake a move out down, but they want to come back up very quickly or reverse the move very quickly. So the close is important, and so is the following candle or two. This following candle, pretty good volume, and we're closing towards the high. So now we have kind of a double bottom situation. Now you're thinking this could be a bottom, especially after the second candle. But this third candle takes out the top of that bottoming candle. That to me is a better signal because it's much more of a reversal. If you try to buy right down here, which some people do, your stop loss is ambiguous. You really don't know what it is. And so what you want to do is the safer thing to do is wait for a larger reversal. If you try to wait for here, you got about a 5 or 6% stop loss, which seems like a lot, but in context, it's really not that much. And then once you have that bottoming candle right there, the market goes on a big rally. And it doesn't always work this way, but that's what our stop losses are for. Okay, our stop losses are there to protect us in case our read is incorrect. And let's be clear, reading a chart or trading in general is just reading the right side of a book. You have no idea what the next chapter is going to bring, and all you can do is prepare yourself for what you've already read. And maybe you're anticipating, is it going to go left? Is it going to go right? In this case, up or down. And then you do the appropriate thing. So I'm going to stop it there, ladies and gentlemen. That's enough for the bottoming lesson for today. We'll continue on with bottoming and then maybe topping action if we don't have any more good trades next week. All right, guys, have a great weekend. I'll see you on Monday on Altcoin Buzz Trading.